Brad Smith, so honored to talk to you and Capital Rock Wealth Management today. One of the things that makes you really unique is that your background includes big investment banks. What was the turning point that made you want to leave that world? In other words, was there a moment that made you step back and say, this isn't the way I want to serve clients anymore?
Yeah, so I started back in 2009 working when the Great Recession hit and working for one of the larger municipal bond banks here in Arkansas. So working as an analyst, trying to figure out, how everything worked behind the scenes instead of starting out, as an advisor. I want to have a good foundation, understand how the products were being created and sold in institutions and whatnot. So I got a good background of learning how things worked from that world, and not to mention the world was in full crisis mode and everything like that. But it's all institutionalized. I wasn't dealing with people. I was to be a just playing out cube monkey and working myself to death and the stresses of putting together large deals. So it was a completely different world, but I always wanted to get to the advisor role. So one reason is being 22, the world's come to an end. Not the best time to start out as an advisor, asking people to handle their life savings whenever the market's selling off and everything like that. And already fight the baby face whenever I'm, at age 39 as it is now. So I can only imagine what I look like at age 22. And so I needed to get some experience before going into that world. And then I spent 5 years doing that, and then went to go work for a commercial bank, working handling their bond portfolio, and then also running their wealth management department. And great experience there, kind of getting the best of both worlds, still working on the institutional side, but also working on the retail side. And from there it was I really enjoyed more working on the retail side. And I was working with a broker dealer at the time, and it was um, great, had great support. But at the end of the day, I was still kind of handcuffed at that broker dealer role. It was a sales role, not being able to have the flexibility to kind of do what I wanted to do. And that's kind of how I transitioned. I worked for a another one of Arkansas's. It was actually the first RA, registered investment advisor. So leaving that broker deal world, giving up my Series 7 and 63 and 66, and going to that IRA world to be able to work with um, retail clients and high net worth individuals, and being able to learn during that process. So, I was there for 2 years and really just fell in love with that side of it. I got my CFP before I made that move to make that commitment to really have a good foundation of being able to help people other than just being sticking them in a cookie cutter model, and calling myself an advisor. That's the old school method way of doing things.
I love it that you have that vitae. Few advisors, Brad, could even come close to that type of experience. And for you, straddling the bank world as well as the retail market. So now here we are in 2025. What made you decide to build Capital Rock Wealth Management?
Yeah, I'm kind of an entrepreneur at heart, so I'm probably not the best employee. I like to kind of do things my way, from from that standpoint. So, I wanted to build a firm that really, could resonate with people, help them discover what they're trying to accomplish, more than just compared to firms that are looking to grow and just get assets under management. I really wanted to build a firm that, help people discover their why, or what they're trying to accomplish
Mm.
in life. And, a lot of people, that are working with advisors, they still don't even know, why they're doing something. And that's really what, I wanted to do is really build a firm on helping people get to their goals, and really understand on why they're trying to do something, and do it the most efficient way possible, whether, that's, through tax planning or retirement planning.
Yeah, I feel as someone, I spent 9 years in wealth management, and really getting to the why is really getting at the heart of a person's, money. Like, what is all this for, right? We all work so hard in our lives. I love it again that you've had the juxtaposition of the banking world, the broker dealer world, and now you're your own RIA. One of the things that I think that we've seen, Brad, I saw it on the insurance side, is dealing with people like clients feeling like they're just a number. Clearly, Capital Rock has totally changed that experience. But do you want to go a little bit deeper into your approach? You started to mention the why factor, which I think is a really great place to start. Again, a lot of advisors, not all advisors, make that part of their onboarding client, but certainly you make it a really part of your client experience. But what else can you say about the Capital Rock Wealth Management experience that is unique?
Yeah, so I mean, you know, a lot of times it seems like when I come across new customers that may be with the current advisor or that have worked with an advisor in the past, they just usually transfer the assets over and then immediately just go to an investment model and, hand them a risk scoring sheet saying, hey, you rank a 7 out of 10 on a risk score, whatever it may be. So, what we do here is number one, we want to make sure that we understand what they're trying to accomplish and where they're at in life. We want to understand them, more than anything. And I think that's more important than just handing them a risk scoring sheet of trying to figure out their fear gauge. Um, you know, and so it's kind of like an interview process, going back and forth. We want to make sure that we're the right fit for them. And sometimes we're not, unfortunately, but we want to work with people that understand what we're trying to accomplish for them. And, on the flip side that, we want to work with people that understand what we're trying to accomplish for them. And sometimes that works out. So, it's an interview process of getting that onboarding correct on the front end. Because we don't want the customer hating us because we're not doing things the way they see fit, and we don't want vice versa want anything. So it's a dance right at first. It's like a first date to figure out if we want to continue to see if this can go on more than anything.
I love that transparency of saying, like, hey, that client might not be a right fit, and that's okay.
Now,
I think that really lends itself well to, what clients need to know about working with an advisor. And one of the terms that you use often, because Brad, you're working with a lot of wealthy individuals as well as business owners in Arkansas, in Texas, and you have this phrase of being this personal CFO. Can you explain what that means? Like, what kind of problems a CFO really helps to solve, whether or not that be for individuals? And I know that it might look a little bit different for business owners as well.
yeah, so I mean, it's being the point person for everything. So, let's just say we get through that first initial onboarding piece there. We've decided to work together. We signed the agreement saying, hey, we're going to have a contractual relationship here, and we get all their information, and that's something that I truly believe. So we want to look at the tax returns. We want to look at your estate planning documents. We want to look at the insurance documents. We want to take a look at your whole full financial picture. So we need everything to be able to do our job, from that standpoint. And and as we're getting that information, that's when we find out, hey, you don't even have estate planning documents and you're worth, $1 million or $10 million, whatever it may be. And you've got, kids, minor kids. Who's going to get the kids whenever you pass away? And so being that point person of saying, hey, we need to get estate documents. And if you don't have a lawyer, we can put you in contact with somebody to handle that for you. We've got contacts here in Arkansas, and I've got contacts in Texas to be able to draft those documents for you. But we need to get something in place. If you're a business owner, are you, set up correctly? Do you have an actual CPA that is doing a good job to make sure that we're taking advantage of everything?
Mm.
If not, we've got somebody that we can put you in contact with from there. But it's me and, my team reviewing that to make sure that everything's in place for you. So it's making sure that we gather all that information, and if they're, you have to share it with us to allow us to be that personal CFO for you, to put you in contact. We can't do everything for you, but we can put you in the right spot to make sure that you're covered and on the right track to make sure that you're being taken care of, not only for you, but also your family and, uh, if you're a business owner, making sure your employees are also taken care of.
So important there. I put certified financial professionals as a noble profession. I don't think people realize how hard that designation is to come by and how complex that your ability to manage all of these complexities is truly, truly in service to the family and the generational wealth that was created. Another important concept around being a registered investment advisor and a certified financial planner is this idea of this fiduciary standard. And when I first came to the industry and I was like, fiducia, who? Like I had a real hard problem, like understanding that there were different, if you will, suitability requirements. I'm not sure if that's the right word or not, but could you explain what a fiduciary standard means and what it means for the client relationship?
Yeah, so I mean, whether being an IRA or a CFP, we have to go by the fiduciary standard. So the simple answer is, your interest becomes it's first before ours. And which is one of the reasons I hate coming from that broker dealer world. I'm not saying that's wrong or right, but it just doesn't align with me on how I think things should be done. So, from that fiduciary standard, everything has to go your interest before ours. So, and the good news is from the IRA world, you're just simply paying us for advice. There's no commissions or anything from that nature. There's no sales goals here. We're not winning trips to Hawaii or anything like that. You're technically our boss, along with the regulators in the state of Arkansas and Texas. Um, we're we don't work for a broker dealer who may have their products that they're pushing on us to sell that may have higher expense ratios or higher juiced up commissions or something that they've created in the background that have a little bit more incentive to sell that may not be in the best interest. Those are some of the things that just really, I think help us make sure that we're aligned and allow us to do a better job for our clients. And it's a really good selling point for us to make sure that we're taking care of our customers.
And the other thing that you're so transparent about at Capital Rock Wealth Management is how, and again, this is by virtue of being a registered investment advisor, how you're getting paid. And you just talked about it. Like advisors aren't getting paid to push you into one product versus another. They're really doing right on behalf of your, what your financial plan looks like. But can you talk about how advisors do get paid, like how Capital Rock Wealth Management, how someone, the fees associated with, portfolio management and financial planning?
Yeah, so I mean, whenever before, after we did that initial, interview or that first meeting and we agree to work together, it's really simple. We send you a contract with our firm, which we're required to do, along with the ADV and all the other disclosures that come with it. But we send you a contract that simply outlines what the fee is. And we charge a flat fee for assets under management. And, whether that be 1%, just to make the math simple, on the account. And, so there's no commissions or fees or anything else that we're incentivized to do by anybody. The only person that pays us is the client. So it just makes it nice and clean, and it eliminates, that conflict of interest of something being pushed to, upon me from somebody above. So like I said, the client's our boss. We're going to do what they want us to do. They still have control of their accounts. We use Schwab and Altruist as their custodians, and they can fire us at any time that they want to, or still have control in their accounts where they may not have that option in other worlds of finance in this world. So it just really makes everything a lot cleaner from that standpoint. So you don't have to worry about that. And you just see that fee and it's charged over, quarterly. And, it just makes everything a nice, clean transaction. You know what you're getting up front. You don't have to worry about anything, fees in the background of eating in returns and whatnot.
I love that you're really the client is well suited and well taken care of by two amazing custodial platforms. Schwab, I have my accounts at Schwab, and over at Altruist, which is a really an exciting company. And again, going back to that transparency, really well done. Clients are really well served at a wealth management office such as Capital Rock Wealth Management because you have this fiduciary relationship, you have transparency of fees, you have the ability to fire your advisor at any time, and your money is held in custodial accounts, not at the RIA level. So I think people new to that wealth management experience, I think that they have an aha moment. The other way that I think that clients will benefit here, and potential clients will be benefit here, and people listening to this, is decide what happens on that first meeting with you, right? Like really deciding whether or not the wealth management relationship is for them, but specifically more about a relationship with Capital Rock Wealth Management. Again, your expertise is very, very, very different and very deep. And can you talk a little bit about that first meeting? Like,
Yeah.
in other words, what also too, Brad, like, what should they typically prepare for a first meeting? Are they bringing in portfolio statements? Are they bringing their estate planning documents? Are they bringing in tax returns? What do you like to see when you sit down with a client for the first time?
Yeah, so I mean, after we've agreed to work together and everything like that, what we want, before we have that first meeting and after they've signed the contract, we want them to get all the information to us because there's nothing more miserable than a client watching me go through their statements for an hour, and then we spend another hour or 2 hours after I've had somewhat time to digest everything going on. Because there's a lot of time that goes into trying to figure out where the heck they're at in life, with their full financial picture, because it's just so many moving parts, from that. So we want to get all that information. Then we want to set up a follow-up meeting. And, what we'll do is we'll put everything into, our financial planning tool that we use here, or we've got multiple actually. We've got, we use Right Capital, use Holistic Plan to kind of show them where the heck they're at. And then it's just like, where do you want to go from here? And it's, you don't really know how to put a plan in place if they don't tell you what their goals are. What are they trying to accomplish? So what we want to do is then create a plan based off those goals, and that, a lot of times it's, I want to retire as soon as possible. But they don't think about, do we want to leave a legacy? Do we want to have, to be able to donate to charity in retirement?
Yeah.
Um, or do we want to save for our kids' college or grandkids' college that may be going off in the next 10 years? How do we accomplish that? And we can model that out and say, hey, based off the history and past, this is what we think we can do for you to accomplish that. And, it's ongoing, making sure that we're staying in constant contact to make sure that we're doing everything we possibly can to, for them to stay on their goals, and making sure that we're not missing anything, from that standpoint.
Yeah, I mean, you just mentioned like Right Capital and Holistic Plan. So clearly there's some tax efficiency into what you're doing. And you talked about it, earlier, making sure that the client is managed holistically, for lack of a better word. Every single touch point of a client's life really matters here. Is there, generally speaking, generally speaking, is there a client advisor relationship or an example that you could give or you want to talk about, whether or not that be an Arkansas or Texas business owner, something where you really seen and you really made an impact? Again, clients' goals are different. So I really credit you, Brad, with not only understanding a client's why, but also to getting to the heart of their goals, because I've seen my own personal financial goals change over time. But is there one example that you want to highlight?
Yeah, I mean, it's
I
a
know there's tons,
growing
right?
list. Yeah, so I mean, I could go on and on forever with it, but I mean, and should have had one this morning, um, that I could go on about. But I think one of like the more impactful ones that I've done this year was working with a business owner, young guy, married with kids, but um, been working with them some, but we finally start, peeling back the onion of getting more information from him, and find out he's got a beautiful whole life policy that one of the beautiful insurance salesmen has gotten to. And I mean, he's a high earner making, pushing seven figures on his tax returns and on for just, pure income. And he thought he's being able to get a full deduction on what he's kicking in this whole life policy, which was, each year he's putting way over a chunk of money. Let's just say you could buy a nice SUV for what he's putting back in this thing.
Wow.
And I was just like, it's like, what we could do instead of doing this. I mean, because the illustrations never work like they do on these whole life policies. And it's one of those deals where, what we did is we worked our way out of it. We got a nice 401k put into place. So now, instead of kicking in, let's just say 50, $60,000 into a whole life policy, now we've got him kicking into a 401k plan. We're able to get the tax deduction for him into it. And then he's also now offering this to his employees
Oh, wow.
that they're now getting to participate. His employees are now happier. Hopefully help out on the turnover of his firm. And then on the flip side of things, he's building now a nice retirement. And then he's also getting the tax credits and tax deductions of setting up that 401k plan for his employees. So, I mean, we're talking easy six-figure savings for them just in 1 year. And not to mention the potential growth of actually investing in a much more efficient way instead of giving it to an insurance company of this projected very small growth. Not to say that whole life policies are wrong or anything like that, but everything needs to be used correctly. And
Mm.
that was just like kind of a prime example of like, if we would have found this out sooner, we could have really saved you a lot of pain of trying to get you out of this situation, from that situation. So, that's just one of the ways that, working with business owners and whatnot that, we're able to really help them out from a cash flow perspective and helping them out on an after-tax basis.
I could get goosebumps just by you talking about that, because there's that waterfall effect of setting up a 401k, and that the people who work at that individual's establishment, at that business, now you're not only changing the life of the business owner, but you're changing the life that are the people, all the people connected to the business, the wife, the mother, the husband, the grandfather, the uncle, like all of the people that make that business. And not only that, really providing stickiness and employee loyalty, and that just changes the direction of a business. So really well done. That's again why I say that this is being a certified financial planner like a Brad Smith at Capital Rock Wealth Management is a noble profession. You are creating a legacy of change. These aren't just like, maneuvers. These are intentional decisions around a business and around everyone that's connected to that business for the livelihood and for the impact of generations to come. So really, really well done there. And anybody listening right now, I know that we all know it was if you're an entrepreneur like the ones that you work with, Brad, Arkansas and Texas, when you are a business owner in those states, there are definite nuances when it comes to tax planning. And, again, this is a big year, a lot of difference, changes in our tax code. But are there any smart moves for any, Texas and Arkansas business owners that you see that people aren't making? I mean, you gave us a brilliant example, but is there anything else on, your radar that comes up repeatedly that when you're sitting down across from that advisor, you're like, across from that business owner, and you're like, here we go again?
Yeah, like one of the most like misconceptions with business owners, it's like, how are you set up business wise? What election have you made? And like, oh, well, I'm an LLC. And I'm like, well, that's not a tax election. So just having the basics of, are you a C Corp, S Corp, sole prop, and all of those have a different fit on when you need to be one. There's many advantages of being a C Corp versus an S Corp and vice versa. There's not a right or wrong answer, but we want to make sure that we have the correct tax election for our business owners. From that level of thinking, and there's pros and cons, and you need to make sure that we're utilizing the right one from a tax perspective from that level. And then making sure that we have the right retirement accounts put in place for them and whatnot. Whether it be a 401k or if you're a sole, a sole prop, then hey, let's put a solo 401k in, and then not to mention, your spouse can actually participate on that as well to really beef up your retirement contributions and save on the tax if you're making really good money. Or for a C corp, you know, not to mention you can raise more capital in the future if you're really wanting to grow your business. And maybe we need to do that versus an S corp. And then also you get the qualified small business, election to be able to save on capital gains down the road if you do ever sell, which is now just got bumped up to $15 million election, which you can't do if you're an S corp. So,
Mhm.
these have like repercussions, on elections that you're making today. And, having that personal CFO in your corner, making sure that we're looking at that. Because there's a lot of good CPAs out there, but CPAs kind of just get your returns and they're very reactive, and they don't get those returns and they don't get your information back to you until the next year. So it's kind of too late to make those adjustments. So making sure that we're on top of everything, um, you know, beforehand throughout the year to make sure that we're able to utilize that, because once December 31st at midnight happens, um, we got a new ball game. And in 2026, well, it's a brand new ball game because the one big beautiful bill. There's a lot more changes coming down the pipeline that people need to be aware of. So we need to be able to take advantage of stuff that's going to expire this year and then get ready for the changes for next year. So there's some stuff that you may want to do this year versus doing next year, and vice versa, on 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 when you want to time up, certain action items.
See, this is why you need to sit down. Everybody that's listening, this is why you need to sit down with a certified financial planner. And this is why you need to sit down with Brad, and you've got to, make an appointment and get his take on what you're doing, because a CPA doesn't know how to manage investments either and doesn't know how to put together an investment portfolio.
Exactly. And I mean, there's a lot of things where, you know, we want to make sure that we're keeping income levels at certain brackets to make sure that we can qualify for certain events in this one big beautiful bill that are now passed, because um, there's a lot of tax breaks out there, or tax credits, whatever you want to call them, deductions, tax benefits. But, if you've got the investments in the wrong place, then, you could be generating too much income or gains that could bump you out of that just by mistake. So we want to make sure that we're taking, a proactive approach to make sure that we're monitoring where we're at income level wise. And then that doesn't just go for investments. We want to make sure that we're not selling an asset that, whether it be real estate or your business, that um, we want to make sure that we're structuring that correct, to avoid any possible capital gains or whatnot, that we could avoid otherwise.
Another reason that I really enjoy the work that you're doing is that you're a family man, Brad. You are a family man. And I've seen you, put your clients first and put your family first. And, you're someone that has a lot of, empathy and can deal effectively with families because you yourself have a family. Makes you a great advisor. You're able to relate to your clients. You deal with a lot of families in Arkansas where you live. Is there a quick proud moment that you want to share from working with one of the families in Arkansas?
Yeah, it's you know, born and raised from Arkansas, went to University of Arkansas, so it's like, I guess I am Arkansas. That's the only state I've lived in. So yeah, so I'm partial to it and everything like that. But no, I mean, this is the reason I like to do it. I like to help people. And by working in this business, I've seen a lot of people either get taken advantage of
Mm,
by, by whether it be, getting sold a product, whether it be insurance, like we discussed earlier, an annuity, or some type of alternative product or something that may have a nice juicy commission on it, from that level, or just people that are looking for help. Um, you know, we can really help people down the road, by starting today. And I don't really have an instance from from a memory or anything like that, but I just want to see people taken care of more than anything, and making sure that it's done right. Um, you know, we can make everything a lot easier for people if they're willing to open up and give us the information we need and really make things easier, not for them, but for their families down the road. From an estate planning standpoint to help them avoid, um, whether it be probate, but also just I mean, let's just say something tragic happens, and not to go too down the dark road, but I mean, we're all going to die at one point, and we want to be there for our clients to make sure that, for that, maybe that spouse or child that doesn't have the investment experience or financial experience, that we're there for them to walk them through of the nuances of hey, this is going to how this is going to work, and we're here for you. And we want to make sure that they're taken care of, and also making sure that we follow up on everybody's wishes on how their estate's handled afterwards, for their legacy planning piece of it.
I think that's so important. Brad, you have inspired me to, I'm almost done. I'm in the final stages of my estate planning. I live here, obviously, in Pennsylvania. So it's really great that you have access to all of the different estate planning attorneys because if you ever talk to an estate planning attorney, if there's not a will in place, if there are not powers of attorney healthcare, like your life could really unfold in not a great way. And I'm the mother of two kids and the proud grandmother of three kids. So, thank you for the work that you've done because it has inspired people like me to just say, okay, let's just get this done. And it doesn't have to be a negative experience. It could actually be empowering that you feel like in some ways that you've left things the way that you wanted to leave things and that you feel organized and you don't put the people that you leave behind in unfair positions where they have to make unfair decisions and have these tug of wars and all of these bad things that we hear about families having like feuds, like even some of the richest people who have died unfortunately didn't have estate planning, and you just see years and years of people going through like terrible battles and it's just all negative energy. Who wants
Yeah.
that? Yeah.
Yeah, exactly. I mean, and the one thing people should take away from this, for whoever may be watching, I mean, everybody needs an estate plan, whether you have zero assets or, 100 million in assets, whatever the number may be. I mean, you need at least a basic will, but I mean, I'm a firm believer everybody needs a trust. It eliminates probate, number one, which is costly and expensive, and it puts the kind of the cards on the table. And it's kind of like you said, I mean, after you're gone, a lot of people assume, yeah, my kids won't fight, or there won't be hurt feelings. And or if you make a trustee, the oldest son or the daughter, whoever, it may be, it puts them in a tough position. And I think having everything put in up front, and being very transparent on your wishes, can eliminate, you know, the family fighting or anything afterwards. But just having something basic, eliminates that, because the last thing you want is something to tragic happen and you leave whatever it may be behind to your kids, and they end up fighting and hating each other. And it doesn't even have to be money. I've seen people fighting over, family heirlooms, whether it be a family China, mama's favorite China plate or whatever it may be. So it can get real, nasty quick over just the littlest things, and being very clear, on, on, on how you want your stuff handled, after you're gone, handling that today to eliminate, that down the road, and putting people in a tough spot will really make, all the world in the difference.
Another aspect of what you bring is helping Arkansas and Texas families steward their philanthropy. So, a good financial plan helps to identify that charitable component, the wishes, whether or not it be through an estate plan or a donor advised fund. Can you talk a little bit about what that charitable and what that philanthropy component looks like right now? Like, what are you hearing and what are you helping clients do right now in terms of their own giving?
Yeah, so I mean, back when Trump came president, I guess what, 2000, the first time, I guess back in 2016, and then he passed his first tax bill, back in 17. He really made the standard deduction huge. And so what that did was really simplified everybody's tax returns. That's great. But what it did do was it eliminated, people itemizing their charitable contributions, unless you're somehow had a standard deduction basically higher than 30,000 a day. So, people say, yeah, I donate to my church, I give, XYZ, but they're taking the standard deduction, so they're not getting credit for that. And there's multiple tools that we can use, whether that be using a donor advised fund to donate appreciated assets, and do a grouping, and to, say, hey, um, you know, maybe your income's up dramatically because we sold off assets, or you sold your business, or whatever it may be, or maybe you just got I don't know, you won the lottery and you want to be charitable. What we could do is donate assets into a donor advised fund for you. And the good news is that goes into that account. It's able to grow, and then you can dictate how you want that money, when and what, to whatever charitable organization you want. So you get the tax deduction finally there, if it's, if you're above the standard deduction. So you're able to take advantage of that, and it's assets that have appreciated. So, let's just say you bought Apple for $100 and it's now worth $1 million. You could then, donate a piece of that, and really it only cost you $100, but even though the assets going in there are much more than that. So that's one way of, like, taking advantage of that, and then people just not realizing that they're not getting that deduction. You're like, well, I turned it into my CPA. Well, yeah, you turn it in your CPA and they put it on there, but you're still taking the standard deduction and not getting that piece of it. And there's other aspects you could look at doing, such as charitable remainder trust and whatnot for people that are high net worth, and that's a time for a whole nother episode if we want to go down that
For
rabbit hole.
sure. Wow,
Um,
lots of nuances there. Thank goodness that you can help people sort that out.
Yeah, correct. And the good news is next year, people will be able to itemize at least, if you're single, $1,000 on charitable deductions, and 2,000 if you're married. So I've told people, hey, if if you're still gonna be taking standard deduction, you want to going to be giving to charity, then you may want to hold off. If you're going to just do at least 2,000, then let's hold off until 2026. It's not much, but it's better than the alternative.
Well, we are in Q4 of 2025. So looking ahead in 2026, I like the way that sounds. What is the biggest financial opportunity that you see for your clients? Like, what should people pay attention right now? You had mentioned some of these earlier, but I wondered if you have some of your like top favorites.
Yeah, so I mean, the one big beautiful bill, I mean, that's kind of the forefront of knowing, you know, very similar to what we just talked about. Of when to do something. Do we need to do it this year versus next year with all the changes coming along? So, if you're working with your advisor, you need to be, telling them what's going on with you. And so that way they can figure out what would be the most optimal scenario. And then working with the CPA, double checking everything. I mean,
Mm.
they're the ones signing the tax return and doing everything. And, and it's one of those where you want to make sure that you're doing everything's a timing issue. And this year and next year is more important than ever with all the changes come with the one big, beautiful bill. To make sure that you're not having what we've referred to as a tax torpedo, by, recognizing too much income one year versus the next and really hurting yourself by not being able to take some of the advantages, that are being offered with this new tax bill.
Are there any other common financial mistakes or risks that worry about people kind of carrying into the new year? I haven't checked the VIX, but it doesn't feel like there's been a huge amount of volatility lately. But is there like one action or something that you would recommend to, that clients could do to mitigate any risks going further into
Yeah.
the new year?
There's a whole slew of things, and you referred to it with eggs being so down so low pretty much all year, especially after the start that we had with uh,
Exactly.
Trump tariffs. I mean, it's been basically just kind of going. We had a steep drop off, basically a 20% drawdown from all time highs, and now we're we're back up there, and just there's a I'm hesitant to say, but I mean, it's been somewhat easy. Is the markets have made me look good, and all advisors look good. If they've had a diversified portfolio, and making sure that allocations are correct, and making sure that hey, maybe we need to um, take a look at what we've got here, making sure nothing's gotten out of hand, and not getting out too far over our skis, and making sure that we're aligned with what we're trying to accomplish here. Because um, when things are, feeling good, and that's when people get overconfident. And that's not to say what I know what's going to happen, but we just want to make sure that we're aligned correctly with what's going on for what they're trying to accomplish. And from that standpoint, because everybody's a genius in a bull market, as they say, and we want to make sure that we're at least doing some risk management to make sure that we're reallocating in the right places where we need to.
Excellent. I totally agree there. Clearly, you're an advocate for 2026 planning right now. We have talked about so many examples and anything, but is there any example that you want to leave with us that, how early planning, again, it's Q4. It is the ideal time to sit with a certified financial planner, a fiduciary, someone who could act as your personal CFO to help you, and whether or not you own a business or not, still make these eh, really powerful, like lifelong decisions. Like I call it the slight edge principle. Like one decision can have a dramatic impact on the rest of your life. But is there a real world example how early planning, how you've seen it make a difference for a client, whether or not that is strategically or financially, or again, generationally?
Yeah, I mean, one prime example that came up here in the last week or two, that working with a client, get their tax return because they finally got it back, and noticed that their taxable income was up dramatically. So they had built up quite a big cash position, had a bunch of CDs that were throwing off a lot of taxable income for them, substantial amount. And they have a nice big retirement account with me, and it's like, well, what we could do is just simply just change up the asset allocation here. So, what we're doing now is getting the CD money in actual equities that would lower their taxable income, and then just basically switching out the equities in their retirement account to more fixed income. So what that did was it's lowering their taxable income dramatically. We're pretty much through the year, but what it's doing is it's going to lower it dramatically starting in 2026. So we're doing that planning now, putting it into place. And so not only are we lowering their taxes for 2026 and in the future. But that should also lower their RMDs because of we're de-risking the, allocation in the IRA. So it's going to lower their income there. This will then allow for us to do Roth conversions to then be able to get that money tax free for them starting going forward. So we're lowering, not just the taxable income, but we're getting that tax torpedo down the road, that, IRAs are now presenting for people that have built up a nice net worth in them just because we've had such a bull market basically for the last 15 years. And with new inherited rules with IRAs, I mean for non-spouses, I mean that money's got to get out of there in 10 years. What we're trying to do is really get that money out for people that want to leave a legacy to their kids and get it into Roth IRAs for them. If it makes sense, we do that modeling with our tools here and try to make, the best assumption that we can. There's not a right or wrong answer, but it's, what people are trying to accomplish. But, that's just one instance of, hey, let's have the conversation now and not 10 months into the year like we just had that we could have, we basically lost a year of time if we would have had this conversation a year ago to be able to get it put into place.
Well, Brad Smith, I want to thank you. I want to thank you as founder and CEO of Capital Rock Wealth Management. I want to thank you and your team for intentionally choosing to be a fiduciary and a certified financial planner for all the impact that you're making with all of your clients. I want all the best. May God bless you, your family, everybody at Capital Rock Wealth Management, all the clients that you help. Thank you so much for choosing this, and thank you for the honor of this conversation. You are really an incredible human being with a lot of knowledge. So I'm very thankful. Thank you for helping to make our world a better place.
Yeah, no, thank you for the time and for the kind words. So I may need you to talk to my wife for me, and well, with all that. But no, I love what I do. It's fun. It's fun to help people and to show value other than just handling the investment piece of it. We're kind of a retirement therapist for people to make sure that we're getting them where they need to be, and it's more than just a business relationship. We become part of family and whatnot. So it's great business and we love it.